Right, so since we have identified our trading range, high and low, we can clearly see that our trading range, high and low, this one here is our, as you can clearly see, this one here is our inducement. Let me zoom so that you guys can clearly see that this here is a valid pullback. You can clearly see that that's a valid pullback and price has retraced, took it out. You can clearly see that's the major inducement. And yeah, major inducement because it occurred above the breakout structure. You can clearly see here is our breakout structure, and this occurred after the breakout structure. All right, so exactly right here, you can clearly see that there is no any other, like there is no any order flows here. I mean, all the order flows are mitigated, because if I start from here, you can clearly see that this order flow is mitigated again. All right, so that's not the correct order flow. The correct order flow is this one. The reason is why that's the correct order flow is because of, all right, let me zoom again. Here, you can clearly see that this one here is a valid pullback. Let me use the path. Here, you can clearly see after the closure of this, I mean after price closed above or priced, so you can see this is the high. So let me do like let me start somewhere here. You can see that this one here is a valid pullback, and that valid pullback occurred after price has like broke past or has just gotten out of this extreme order flow. So that then price reversing back, you can clearly see that yeah, in this case there is this pullback. This pullback now will make us use this one here rather than the whole move. If you clearly remember when we were identifying order flow, I said something like this. So that's the reason as to why I am picking this one here to be the extreme order flow. I mean this one. All right, so let me now zoom out, and yeah, that's the extreme order flow. You can clearly see that price did that, gave the reaction, but this reaction failed to break past our swing point. So price reversed again, and price is now reversing and reversing and reversing. And where is our? We said that if this extreme order flow is not, all right, all right, all right, all right, all right, all right. Something is interesting here. All right, no, this is not inside this. Yeah, I was like, this bigger order flow, it's inside this, but it's not, because price just, you can see, closed above the order flow. So all right, so exactly right here, you can clearly see that on this extreme order flow, which is already mitigated, you can clearly see that this here is the extreme order block. We said that there can be an extreme order block even if the extreme order flow is present. And the extreme order block only works when the extreme order flow fails. So yeah, exactly right here, I can clearly see this is the order block which is associated with fair value gap. And the fair value gap here is mitigated, but there is still some imbalance that is left. That's enough to confirm the order block or to make the order block still count. So you can clearly see this is the order flow, price give the reaction, and yeah, you can see price gave the reaction, made it to this end, but then later reversed, meaning there is some possibility that this here will fail. So I will not risk like taking, not unless I dive into the lower time frame so that I see who are in control right here. I cannot risk taking direct entries. By now, I just want to believe that you guys know the riskiness of actually using reversal patterns and order flows. Even though I know it's work, like in this case, you can see a perfect long rejection candle and a big momentum candle confirming that reversal. But sometimes price may fail the first pattern, still on the same order flow, dipping in, create another reversal pattern, fail it again, create another one, and then now strike through towards the external liquidity. So you can see like you'll have get like two stop outs before you get that, or maybe a one stop out, or maybe three stop outs before you get that will move. That's the order flow. So in this case, I will not risk it. I will not risk taking the other buy. After all, this, you can see this, like that was a very long buy, meaning that price was supposed to actually make it to the external liquidity. You can see price like went up like very nicely after mitigating this extreme order flow. Anyway, if I mark price failed this order flow, and we said if the extreme order flow fails, then we'll be looking forward to use the extreme order block. All right, so exactly right here, you can clearly see price is reacting from this extreme, right? All right, so let me continue running price. Let me make it faster. So you can see right there, someone else would have bought again here, because you can see we are back again into the order flow. But in this scenario, you can see like it's not a good thing. It's not something that I'll consider. And after all, you can clearly see that the sellers are in control. So in this case, I wouldn't recommend a buy in this case, because if you dive into the lower time frame, you will clearly see that the sellers were in control at the moment. You can clearly see a taken of a high, a took out of a high, same point, broke like a break to the downside. So this means that this and this is a bearish trading range. So this means that the sellers are in control. So in that case, it's very risky for you to take that buy again after all price has done something like that. So in this case, this one here, even though this here was a perfect or a good reversal pattern, I wouldn't recommend buying from this side. I would just wait for price to either mitigate this extreme POI, I mean fail the extreme order flow and mitigate the extreme POI, or price to actually, or the buyers being in control. In that case, I will have to shift into the lower time frame and check like are the buyers in control, like are the buyers now gained control. Let's say after price has moved all that, and on the lower time frame the buyers are now in control. Now I can start buying and buying until the external liquidity. But at the moment, let me just do this because the sellers were in control, and I will have to make sure that price has mitigated this extreme order block before, and you can clearly see price has mitigated that extreme order flow, and we say, I mean order block, and then we said once price has mitigated the higher time frame POI, that will now shift into the lower time frame. All right, let me write this line real quick, because I will be using this yeah, of course, as the final TP. So now I can shift to the 3 minutes. You can see I was using the 15 minutes, so I'll be shifting to the 3 minutes. And yeah, clearly here you can clearly see that this is what I was talking about right here. The buyers, I mean the sellers were in control. Exactly here, the sellers were in control because price has taken a high and broke past this structure. So you can see sellers in control, and then right here again, the sellers are still in control until I have mitigated the higher time frame POI. Now, if price breaks past that, now the buyers have gained control, because this one here is a higher time frame POI. All right, so let's see if price breaks past that major inducement. So exactly right here, you can see a break by a week. A break by a week is not a break. So let me continue running price. Yeah, exactly right there. Price has now broke past that part with a body. So that in that case, now the buyers have gained control. So right now, I'll be waiting for a lower time frame. I mean, lower time frame inducement. And then after that, now I'll be looking forward to mark that POI. All right, so exactly right there. You can clearly see that price has taken out this inducement, I mean this major inducement, of which we said once we have mitigated the higher time frame POI, this inducement needs to change its role from being an inducement to being a change of character. Alright, so then where is the inducement? Of course, this is the inducement. Price has mitigated this. Exactly right here, I will need to continue running price. Price is now reversing back into the range, and this one here is the inducement, because I don't see any other inducement here. So here, this means that this zone actually, or this POI right here, That's an SMT, so I will not be buying from there. That's not a decisional because there is no any yeah, you know. So right now I'll be using the order blocks because the order flows are mitigated. Of course, you can clearly see that. So that's the demand that I'll be looking for to buy from, or let's say price can do the another thing here. Price can sweep this inducement. That's also a correct, I mean a valid entry module, and if price grabs that, of course we can take the buy. So exactly right here, let me continue running price. Let me make it to 1 so that we can get the exactly right there. We can see a perfect sweep, a long wick rejection, and a bullish candle. So if this bullish candle closes bullish, or closes like with that good, momentum, with that big body size, confirming that morning star, I will be taking the buy, and I will not be waiting for the extreme POI mitigation, because this one here is our major inducement, and an inducement sweep is obviously a valid entry module, and once you see that, you can actually take the buy, like we all know this. So let me all right, exactly right there. You can clearly see a good and very strong morning star pattern exactly right there. It will not be making sense for me to do this, placing the stop loss right there. Yeah, it makes sense. The stop loss is not that huge, but I would just recommend something like this. Yeah, stop loss somewhere there, and of course now the targeting, it's upon you. You can target a fixed risk to reward, 1:3, 1:4, 1:5, or just do the ultimate full TP exactly at this high. Yeah, the 15-minute external liquidity, of course. So that will give us a 10. That's a good risk to reward. All right, so let's get back here, and yeah, of course, let me run the price. All right, let me make it fast. So you can see price is actually respecting the sweep. Of course, price made it out to make that break of structure, and this now gives me now the confidence that there is no, all right, let me not, because price can actually do something like this. You can see there is no any major inducement here, so price can actually come all the way down and sweep this major inducement. So first, let's wait for price to create a major inducement before we can think of something else. Exactly, so price did that. So this means now I have the confidence to let my SL there. But let's say price is approaching this area and my SL is here, and this low of course will now be the major inducement. Let's say price didn't create an inducement after the break of structure. In that case, now I will have to make my stop loss go below down, I will have to extend my stop loss like something like a few pips below, so that now I can create a room for the sweep of that major inducement. That's something like you all, and that's the reason as to why the placing of stop loss like somewhere like there or here will be recommended because of that. But sometimes price can create a major inducement even after that. So it's upon you to actually choose which way you will be doing it, because if you place your sell here, of course your risk to reward will be small and things like that. So it's upon your decision. All right, so that's the major inducement, and let me continue running price reversing back exactly right there, and that's the moment. Now we can clearly see there's no any order flows here. So this one here is my decisional demand, and of course that IFC is our extreme demand. And where is our engineering liquidity? Of course, our engineering liquidity is here because that's the valid pullback. This one is not a valid pullback. All right, so let me continue running price. Right, price mitigated this demand, gave a little bit reaction, but then later failed it. So right now I'm looking forward for, all right, price is still on the demand, on the decisional demand. So all right, price failed that, And this one here is what we call now the engineering liquidity sweep. You can see price broke past this one with a body closure, but then the next candle reversed back or rejected the lower prices abruptly towards the upside. So this gives me now the confidence again to buy from this area, because that's a liquidity grab. We know once the liquidity grab happens, we need to see an abrupt rejection from that area. So placing the stop loss here, right, that I wouldn't recommend that, but placing it somewhere here, that will be making sense. So yeah, because the stop loss is not that huge, placing right here, all right, you can do that, you can place your stop loss right here, but of course the conservative way, just like in this case, it's of course here, because price may end up like, let's say now price breaks the structure and does not create a major inducement on the newly created structure or newly created trading range. This means that this low will be our major inducement, and we know that price can go further sweeping the major inducement before making the reversal. So in that case, our stop loss is exactly at the major inducement. So this means once price gets down, sweeps the major inducement, it will of course sweep my SL too. So you can see now that's the reason as to why placing it right there, even if price reverses and sweeps this low, I don't think price will make it all the way to this, yeah, to my SL. But anyway, again, it's upon your decision. You can monitor them. Let's say for this case, it's when now you just want to buy, and after that just set and forget, just go anywhere, the gym or whatever the place you want to go for the day. But if you want to like manage the trade, then you can actually do that, get that like that good risk to reward, but make sure that you see what price is actually doing. After price has made that break of structure, ensure that price has created a major inducement, so that now it can give you that confidence to leave your sell in that place. So again, like I said, it's upon your decision. So right here, that's the break of structure if price makes it out there. But anyway, let me just leave it the stop loss right there. All right, the about the taking of profit, like I said, it's upon you. If you will be using a fixed risk to reward, you can see even a 1:4 is a good risk to reward. But if you want to make the ultimate or to take the full TP, of course you will have to extend it further towards the 15-minute external liquidity. So anywhere there, you can actually set your, yeah, so any place, the way you want it for the take profit, but just know the final TP is obviously on the 15-minute external liquidity. All right, so right, so price nearly, you can see here, price nearly triggered our sell, but then reversed back. So let's see, price made it to the break of structure. You can see something like very small few pips here, but then price reversed, so that was a good one. All right, so right now I need to see a major inducement before I get the confidence of leaving my sell right there. So let's see. All right, price is actually extending further and further and further out. Then price creates a major inducement. That's a great one. So this means my sell is safe and I can just leave it exactly right there. So this means now you can see the major inducement is taken out by two retracing candles. I will not be taking this buy from this area. Yeah, so yeah, you can see that's a sweep of the major inducement, but I will not be taking that buy. Let me see. All right, price respect the buy, you can clearly see that, but the retracing candles are true. So in these scenarios, I usually don't, not that I usually, but it's usually not a good break of structure. I mean, this here, it's not a break of structure, and in that case, you will have to shift this inducement right here. All right, interesting. Price created another major inducement here. So this now makes the major inducement this, and this here the engineering liquidity. So this means that where is our decisional? Of course, our decisional will be this one here. Yep. So that will be the decisional. And where is the extreme? Of course, the extreme will be, is it this one? Nope. This one, or this one. Alright, because this one is engulfed, this one is engulfed. And if I pick this bullish one, the bullish one is not associated with a fair value gap. So this means that this one here is the correct one. And after all, right, guys, there is something here. You can see that's the extreme order flow and it's mitigated. So I'll be shifting to this other order flow, which is not mitigated. So yeah, in this case, there is order flows. So this means that I cannot buy from this order block. Yeah, so this order block, I cannot buy from there. This is the extreme order flow. We say that mitigation by an invalid pullback is not a valid mitigation. This one is an invalid pullback. And a mitigation by an invalid pullback is not a valid mitigation. So this means that I'll be looking forward to take the reversal from this extreme order flow. So in that case, I can just set my buy limit order exactly right there. My stop loss, of course, at this low, and of course target profit. I can use a fixed risk reward. I mean 1:3 if that's the rule that I usually like. If that's the rule on my trading plan, that I should be using a fixed risk reward of 1:3, 1:4, whatever. But if you don't have that, and yeah, you just need to place your sell at the higher time frame external liquidity, or that's where actually the full TP should be. So let's see. Yeah, you can see the inducement now it's confirmed. So let's see. All right, price has taken out the inducement, and right here, this one here, I cannot confirm this one here to be a valid rejection, even though this one here is all right. The retracing candles are not giving, so I will not confirm this one here to be a valid break of structure. So even if price makes a break of structure without triggering this, it's fine. I will just need to go on to the current trading range. So, and exactly right there, you can see. So this means that this order, like the limit order, is no longer valid, and so I'll be getting now into this new, yeah, right here. So that's the break of structure, and I need an inducement right now. Exactly right there, price has created the inducement. And where is the order flow? Of course, the order flow is this one, like the whole selling move. I mean, the whole bearish move. That's the order flow. So let's see what price does. Right, price sweeps this. You can see. So this means if that candle closes bullish, then I will have the confidence to actually take the buy. Exactly right there. So we can take the buy here because that's the major inducement sweep. SL, if I place the sell down here, I will have a very small risk reward. And also you can clearly see even in this scenario, even after placing my sell there, you can see the risk reward too to the higher time frame external liquidity is very small. You can see just some few pips here, just some few pips below. So in that case, yeah, because the extreme is exactly right here. So you can see it's actually some few pips to full TP, and then so this means the risk reward. Anyway, some take a risk reward of 1:1, but I usually don't recommend such risk rewards. And also the doing of something like this to make it a 1:2, of course, it's something that you can do, but I usually don't recommend it also because you can see you're extending further from the external liquidity. Price may just tweak a little bit and give that reversal or create that complex pullback or create that corrective move, and you'll get triggered even though your trading decision was correct. So in that case, I usually ignore these kind of trades. And right now, if I am to take the trade, then I will have to ensure that price retraces all the way to my extreme order block. Let's say price fails this order flow and mitigates the extreme order block, because an entry from this order block will give me the good risk to reward if I am to target this, yeah, this high time frame external liquidity. So you can see a 1:4. That's a very nice risk to reward. All right, so I'll be running price. So exactly right there, you can see the sweep failed. All right, price is reacting from the order flow. You can clearly see here, price is reacting from the order flow. So if I was to use, let's say now I use something like after price has, you can see that's the bullish engulfing. So after price has closed there, and place my sell, of course, right there, and target this area, you can see this is also a valid entry and it will give me a reasonable risk to reward. But you can see this is a reversal pattern. This is an order flow. The first reversal pattern can fail, but we don't know if it will fail or price will respect that and make the ultimate move towards that structure. So that's also an entry that you can consider. It's actually depending with you and things like that. Yeah, so it's upon you to actually know how you will be approaching it. All right, so right there, so let me run price, and you can clearly see price. All right, then eventually price did that. Exactly, price did that, failed that trade, mitigated this one. So if you had set the buy limit order, of course by now it will be triggered, but then as you can see, price failed that. So this means now the sellers have taken control, and you can clearly see the few pips price left to full TP, and now price is actually doing that. So this means that so this is actually a lesson that even even after everything seems right, even after everything is correct as per the strategy, price will do, like, price may fail that, because the market is, it's an uncertain environment, and we have to, like, it's always right. Yeah, it's an uncertain environment and it's always right. So if price does that, just know that that's a loss, and we need to, like, that's factored in. So just need to accept that. And as you can see, if I run this price can clearly see price did that. So this means even the previous entries also got stopped out. You can clearly see price did that and that, and the sellers are still in control. So this means we cannot take any buy there because the sellers are still in control. You can clearly see that, and all the entries that we had entered, price took them out. You can clearly see that. So even after everything seems right, price may fail everything, and yeah, price will do its thing. And the strategy is thus depicting the patterns of price, but the market is an uncertain environment. Something can just happen and fail everything that you have analyzed. So that's it. Even after doing the top-down analysis, just know that you can still get the stop outs. Even after being conservative, just know that price can still reverse. Even after placing your stop loss at the safer place, price can still reverse and make it out to your Excel. And you can clearly see that the sellers dominated after that. You can clearly see inducement, sellers in control, break of structure. You can clearly see everything. Inducement, sellers in control. So you can clearly see the sellers control the market after that, leaving some few pips to final TP. Everything was right as per the analysis from the higher time frame to the lower time frame, but then price did what it did. And that's right, you just need to accept it. There are days like this that you will experience. Even after everything seems correct, even after everything is correct as per true SMC, you still get stop outs, and you don't even know, like, when will price do that. But of course, when you get that, don't be like the strategy is not working, or don't get frustrated. Just know that the losses are factored in, and in the long run, a profitable system will always emerge you from that drawdown. So yeah,